Hey, good morning. Let's go over today's trade plan. So in the overnight session so far, the market has been balancing within the upper part of Friday's range, and given the recent bounce breakout to the upside, we know that the buyers are still technically in control. Now, in order to continue to go higher and break out to even higher prices, we are going to want to see broad market strength in real time and some sustained upside momentum. And our short-term bias today is going to be neutral bullish. So that means that we are still going to favor the long side as long as we are seeing those signs of strength in real time as well. So for example, if off the open we are seeing broad market weakness and some decent downside momentum, then we have to be careful on taking any aggressive longs. And the pre-market support zone at 32 to 34 is the most aggressive area of support. And it only makes sense to go long there if in real time we're not really seeing a lot of weakness and we're not seeing any big downside momentum. And then from there on the upside, we have resistance at 37.75 to 39.75, which marks Friday's high, which in this case is the all-time high. And in order for the market to break out and head higher, we would have to see that sustained upside momentum. So we want to see the tick holding above zero and printing some decent upside values, at least around plus 5 to 700. And without that sustained momentum, the market can either continue to balance, or we could even see a pullback towards the 24.5 to 27 initial support zone. So again, given our neutral bullish bias, we are still going to be more focused on the long side, but with that understanding that in order to go higher, we are going to have to see that upside momentum. And if we start seeing some warning signs in real time, then with that neutral bullish bias, we can still actually even take shorts as long as we're getting good trade location and as long as there are some pretty decent reasons in real time to consider the short side and if there's enough reward to risk. But we would have to be a little more defensive and cautious on the short side. On the downside, below 32 to 34, you have the initial support zone at 24.5 to 27. That is still an area where responsive buyers can be active. Below that, we have some support at 21.5, and then the balance breakout area at 17.25 to 19.25. Now, we would have to see a lot of intraday weakness in order for the market to get down there, but that is an important inflection point. And in the event that the market does pull back, the 17.25, 19.25 is a spot where buyers can be active. 24.5 to 27, like I said, is an area where responsive buyers can be active. And then right off the open, how the market responds to 32 to 34 and 37.75 to 39.75 is going to help us establish our real-time intraday bias, and then how the internals are developing, how the momentum situation develops, and how the other markets are behaving is also going to provide us with a heads up on which way this market could turn. But, at this point, the breakout is a couple of days old, and that's why our short-term bias has switched from bullish to neutral bullish. So now we just have to exercise a little bit of caution and make sure that there is sufficient strength in real time to justify leaning on the long side. Otherwise, we can still consider longs, but at better trade location, like down at 24.5 to 27 or at 21.5, and of course 17.25 and 19.25 is a significant inflection point in the market. And then on the upside, beyond 39.75, there is no hard resistance. But given the range expectation, if the market holds pre-market support, then on the upside, there would be potential for the market to get to 45 to 47, and then 51 to 53 would be a bit of a range extreme. So those are the main ideas. Heading into the open, let's see if the buyers can hold ES above 32 to 34. Let's see how the market deals with this 36.5 prior VPOC and current high volume node, and we'll take it from there.